Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with your European session morning outlook. We'll start with the North American markets. We had the GDP price index for the fourth quarter 0.4% worse than expected at 0.8%, and the annualized 0.1% worse than expected at 0.7%. We also had personal consumption expenditures prices for the quarter 0.1% worse than expected at 0.6%. And the core data is as expected at 1.2%. The Chicago Purchasing Managers Index is 12.7 points higher than previous, and from Canada, the GDP month-on-month is as expected at 0.3%. US stocks closed sharply higher on Friday, booking a second straight weekly gain but posting the worst January performance since 2009. Friday's surge came amid a global equity rally following a surprise decision by the Bank of Japan to push a key interest rate into negative territory that some said could push the Fed to ease up on its plans to steadily raise interest rates. The dollar also soared against the yen Friday after the news. The Dow Jones was 37 points up, the Nasdaq was 127 points up. Dixie also surged up to 99.50 from 98.94. USD Canadian dollar 70 pips down. USD Swiss franc 43 pips down. And the biggest mover against the Japanese yen 222 pips up. We have today Tier 2 news consumption expenditure data month on month, year on year. Personal income month on month. Personal spending for December, Markit Manufakturing PMI, ISM prices paid and manufacturing PMI, construction spending month on month, Fed's Stanley Fischer speech, and RBC manufacturing PMI from Canada. All right, that's all for the North American markets. For the EU markets, we had the CPI from the Eurozone year on year. It came out as expected at 0.4%, and the core CPI year on year is better than expected at 1%. The German retail sales year on year 0.5% worse than expected, and the EU money supply 0.4% less than previous. The DAX 30 was 180 up, the CAC 40 90 up, Euro USD 100 pips down. Today's events, we have the Eurozone, German, French, and Spanish market manufacturing PMI, and the most important, Draghi speech later on in the evening. All right, on to the UK markets. We had the GfK consumer confidence. It came out at 4. That's 3 points in the positive. The pound ended last week battered and bruised as the UK economy has been faced with additional pressure, such as the Chinese contracting growth, drop of commodity prices, low EU growth, and a domestic political turmoil surrounding the EU referendum. With all those pressures, investors will be focusing on this week's Super Thursday, when the Bank of England will be publishing the Bank of England's minutes. Mark Carney will have his regular press conference. But most of all eyes will be focused on the quarterly inflation report and the monetary policy report for some clues on how the Bank of England is planning to face the risks for the UK in 2016. With the Bank of England being as timid as possible, the pound has been tied up with the prices of oil and moved along with it. The FTSE 100 gained 176 points Friday and closed at 6,110. The 10-year gilt yields fell 0.4% to 1.56% Friday. The GBP USD is 110 pips down. Against the yen, it's 180 pips up. Against the Australian dollar, 170 pips down. Against the Canadian dollar, 250 pips down. Against the New Zealand dollar, 220 pips down. Later this week, David Cameron also meets with Donald Tusk to discuss the UK European Union negotiations as Brexit risks looms over the pound. All right, on to the Asian and Pacific markets. China's manufacturing data came out in red numbers as the official manufacturing gauge slumped to a 3-year low. The yen weakened against the US dollar and euro in Asia trade Monday as the market continued to feel the heat from the Bank of Japan's move to adopt negative rates on Friday. In the Pacific, we had Australian news, AIG Performance of Manufacturing Index, 51.5 down from 51.9, and securities inflation month on month, 0.4% up from previous 0.2%. The year-on-year data, 2.3% higher than previous, which was the 2%. Overnight today, we have the Australian interest rate decision and rate statement, which we'll be looking forward to. In the commodities sector, we had the Baker Hughes U.S. oil rig count. Rigs targeting oil in the U.S. fell by 12 to 498, the lowest since 2010. Oil prices rallied for the fourth straight session on Friday, amid speculation OPEC and non-OPEC producers may be edging closer to a deal to cut production in an effort to tackle one of the biggest supply gluts in decades. Crude oil prices held weaker in Asia on Monday on dimmed hopes for demand-led growth as China showed manufacturing remains in contraction. Gold had a range of $10, trading at 1,121. Silver had a range of 14 cents at 14.30 now. Crude oil had almost $2 range at 32.82 now, and natural gas is trading at $2.22 at the moment with a range of 10 cents. All right, thank you everybody. That was today's European session outlook. I hope you enjoyed it. Until next time, goodbye.